Hello traders, this is Rich Derrick from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, April 30th, 2013. And being April 30th, it brings a particular feature, which is the last day of the month effect to the market. We had a pretty good walk up on fairly light volume today. All the major averages were higher today. You can see the ES futures were higher by 12, the NQs were higher by 28, and the Dow was higher by 106 points. So we had a typical up day the day before the end of the month. So tomorrow is a little bit more of a wild card, and oftentimes you actually get the markup the day before. So we certainly saw higher prices today on what was mostly lighter volume. In addition to being the last day of the month, tomorrow is the beginning of a 2-day Fed meeting, which could compound some light volume and some kind of flaky trading. So trade cautiously tomorrow, and just be aware of the environment that you are operating within. The advanced declines today were fairly decent, plus 1,400 issues on New York and plus about 900 issues on NASDAQ. The only real notable divergence internally was that we were up about 0.75 to 1% across the board in most of the majors. But while we were higher, we also had the VIX higher on the day. So the VIX is showing a little bit of a divergence. And usually when the VIX starts nudging up, usually you wind up seeing some kind of a reaction in price to the downside. So just be aware of that and be ready for that tomorrow if it does start to materialize. Let's move on and take a look at the major futures. Let's take a look at the ES and the NQs. We'll start with the ES. All right, so here's a look at the ES chart in the daily time frame. Couple things should be sticking out to you. Certainly, we had a positive day, and we expanded the range of last week. But in so doing, we really only basically matched the prior high of this move that we set earlier here in April on April 11th, and also we really didn't scratch out any kind of a new material high close. We're essentially closing where we closed exactly before on that April 11th candle. So we do have the potential here for a double top. And I just want to turn your attention to the seeker. We did get our 13 exhaustion on the seeker on today's candle, so that will be in effect. As we've talked about in previous videos, well, as the countdown was progressing, this 13 is going to be very, very flat relative to where the countdown began. The countdown began at about 1555, and right now we're getting our exhaustion and we're closing only at 1585. So we've only really gained about 30 handles on the whole advance from 1 to 13, which is very, very little. Usually when you're seeing a real high probability exhaustion, that's going to reverse the market to the downside. You get better extension and you get a better impulse to the upside. We don't have that, so it definitely makes this this signal a little bit suspect. But at the same time, the market has done both in time and price what it needs to do to record that exhaustion warning. So we have to be ready for some leveling off of trading perhaps as a result of this. Key levels overhead are going to be the 8-ace level at 1625, which is pretty far away from where we are right now, at least in relative terms to where we've been moving so far with this lackadaisical expansion to the upside. To the downside, key support is going to be the 10 EMA at 1570. And now there's one other level that we need to be aware of on the chart that's going to be very important going forward. That's going to be this the risk line that we just began plotting off of the seeker exhaustion, and that's going to be 16. Let's call it 1609, the closest round number. You can see the little magenta line starting to print here. It's going to keep printing here until it gets broken or until we get 9 bars down and validate that signal. So definitely something to be aware of. That's a new little level that's just presented itself to us from our seeker tool. Now looking at the NQs relatively were a little bit stronger than the broad market. We made a new high on the move that definitely cleared the prior high, whereas on the S&P side we only matched it. We did make a new high close on the move as well, and we don't have that 13 exhaustion standing in the way. So if the NQs can get up and go here, that would definitely be positive. And it's also very possible for the S&P to start going lateral, and for the NQ to attract money and go higher. Now that's very typical when you've had such lackadaisical and range-bound trading. So be aware for rotation into the Nasdaq. Levels to watch: Friday's low, and also the 10 EMA at about called 28.20. Overhead next level is going to be this plus 2 ace on the GAN box at 28.90.63. And since it's the plus 2 ace level, that's going to be a very formidable level if we can get up to it. Okay, and one thing to take a look at here, I want to take a look at some things internally. Internally, right now we're taking a look at the Dow Gold Ratio. This is the Dow divided by the price of gold. We had this huge climactic spurt to the upside here as gold was collapsing and the Dow was heading higher. What we've seen then is kind of a reversal in the ratio, and the ratio has actually been pulling back in ever so slightly in favor of gold over the actual equities. So right now we've got kind of a consolidation coming on here. Watch the 50% retracement of this move as a resting point. If we break below that, that's probably going to indicate that we're kind of in the midst of a risk off move in the market where stocks are being sold and hard assets are being reacquired. Remember, this is a very climactic spurt that we saw here. See how parabolic this went. With a pretty well organized move, we broke out above this trend line and then started to accelerate to the upside here. This got very steep. This is definitely cause for concern for the bulls. Elsewhere internally, here's a look at our 10-day trend. This is the New York Stock Exchange trend. This is kind of mid-range right now. It's moving to the downside, but it's got a long way to go before we get to that 0.85 threshold of being overbought in the market. It's actually a little bit closer to being oversold than overbought. So right now the 10-day trend has room for the market to continue higher if it wishes. All right, also internally in the market, here's a look at the cumulative advanced decline line. The Nasdaq side has broken. It's getting back up here and retesting the trend line that it broke to the downside. A couple key levels to watch here in the ratio are going to be the trend line that it broke and also this prior high. If it can recoup and rebound and reacquire those levels, that would be an extremely bullish sign and indicate that the Nasdaq may be ready to get in gear after having this little hiccup here. On the bull side of the argument, while the Nasdaq side is trying to recoup itself, the New York Stock Exchange side, which is the graph on the top here, has not broken yet. It's still holding above the trend line, and today it actually recorded a new high close on the move, which is another bullish indicator. Remember, these are leading indicators, and these will typically start to roll over before the market starts to actually weaken. So this is still positive for the market overall. On the New York side, the Nasdaq side, not so much so, but could turn back positive if it can make a new high on this move. Okay, here's another relative strength measurement. Here's the NDX divided by the S&P. You can see we got a little bit of a bump up today where the NDX did outperform the broad market. What we need to do is we need to break out above this threshold here that we couldn't really get through, just above 1.80 on the ratio. If the market can take out the 1.80 threshold, then we can start talking about some relative strength developing in the NDX for real. If we do that, that'll be a very positive development, since many of these dividend-paying stocks in the broad market indexes are kind of overbought. So let's keep a close eye on this, and definitely the decent performance from Apple today weighed very heavily on that and was a big bonus for the overall NDX, since it's got such a heavy weighting. The other key consideration for the overall NDX is how the stocks within the NDX is performing versus the NDX. Right now, we're starting to see a little relative strength develop in the stocks, but we haven't been able to get back and above this key breakdown. If the stocks versus the NDX in this ratio can break back above that, that would be very positive for the market, especially the Nasdaq side, and then be able to talk about some relative strength developing in Nasdaq. I just switched down to the daily time frame from the weekly time frame that we're looking at. You can see this key overhead is still a ways away, but if we can break that and hold above it, that would be a key positive development. All right, here's a look at our multi-sector daily chart. Got the XAU in gold, which is just trying to really find its footing here and bounce. Right now, it's really just kind of a tepid, oversold bounce. If we can take out this prior high, we can talk about potentially putting in a higher low, but until we do so, that's not a higher low yet. And you can see that all the other majors were positive to some degree. Both the SOX, the BTK, and the BKX were all positive on the day. Let's take a look at our actual indices for the sectors and see what they have to say. All right, here's a look at the individual sectors. Let me just sort them according to their relative performance. We'll take a look at the XAU. Still trying to bounce. It was a top gun on the day, up 1.5%. Oil stocks were pretty strong. The semiconductors outperformed, as we just talked about, and moving higher. One of the key considerations here is in the countdown for the Seeker and also for the Comer. For the stocks, we're now potentially popping up above here, where we can get up and not have any headwinds of any counts in play right now. We'll look at those individual charts because a couple of them still have some risk levels that we have to deal with. Utilities were kind of middling here. At the bottom was the housing. The BKX was fairly weak on the day, which is actually okay because when we get late into a move, a lot of times you wind up seeing a rotation away from the banks, which are typically an early performing sector, into the later performing sectors like the utilities, the transports, and whatnot. So definitely want to see some decent performance out of the transports and also the energy names. Energy names were okay today, not great. One problem was the transports. You can see are pretty far down the list here, and they should actually be trading better right now. Here's a look at the XAU, which was the top performer on the day. All right, so key areas to keep in mind for the XAU going forward would be Friday's low, and then this 112.50, which was approximately last week's high, and also that 1/8 level on the GAN box. The OSX was stronger than the overall market, which is what you want to see if the banks are starting to lag. However, while it was up, it did not clear last week's high and still has key resistance at the 8/8 level at the 250 level. Also keep in mind that there's going to be key support here. We've got layered support here with the 10 EMA and the 50 DMA, all kind of clustered near the lows from Thursday and Friday. BKX was positive on the day, but fairly sluggish. It's above the 8/8 level, which is positive, and also above the 10 EMA, but it's still below the active static trend line going back here to day one of this Seeker setup phase. That remains the key area for the bulls to take, and then we can talk about pivoting to a new high. If we do take out that level, which right now is about 57.35 or so, if we do pivot higher, then we're going to have key resistance here at 57.81, which is plus 2/8 on the GAN box. Key support for the coming session is going to be 56.25, which is this 8/8 level, and always a very important Murray math number. As far as the oil futures today were pretty strong on the day for most of the day, and then really kind of came on again later on. Broke back above that 4/8 level, 93.75. Next level on the upside is going to be 95.31, and then this prior high here is going to be very important because it was also the active static trend line from this 9-bar drop. So we got double level overhead there. Support right now is right just above $92, which is where the 200 DMA is kind of coincident with the rising 10 EMA. Now, taking a look at the gold chart. Gold chart, it's getting a little deep in the count here. We're now 7 days up on this little bounce. It was higher on the day, but didn't make a whole lot of progress, and really was essentially more just inside trading action, if you will. So key levels overhead are going to be this prior high, and note that this prior high is also the opening of this monster candle to the downside. So we've got resistance overhead at 1430, 1483. Key support is going to be right now the 10 EMA, 1443, which is also the area of Friday's low. All right, folks. Well, just remember that a couple things for tomorrow. We've got last day of the month, which means there's going to be little micro agendas with hedge funds and the other funds kind of running around doing what they want to do to dress up their portfolios. And also we've got the beginning of the 2-day Fed meeting. So keep it smart. Maybe size down just a little bit unless you see something you really like. And wait for the other side of the Fed meeting, which should be a little bit cleaner trading. Thanks for listening, and this has been Rich for Tradesight.